Okay, this is one of my most favorite things to talk about, or where I can help people out when it comes to your financials, and it's how to simplify your P&L. The reason I like talking about this is because I see one of the biggest things that holds people back when it comes to understanding their P&L statement is the way that they're looking at it, the way that the information is handed to them from their accountant or the bookkeeper, what they're accepting and what it is that they're trying to focus on. Hello and welcome to the Profit and Cashflow Mastery podcast. I'm your host, Gavin Smith from the Profit Analyst, and in this podcast, I'm going to be showing you how simple, easy, and more important, how practical numbers can actually be for you as a small business owner. I have a pretty extensive finance career and background, but more importantly and more relevant to you is I'm a small business owner myself. I've built multiple businesses from startups and turnarounds through to 7 and even 8-figure plus businesses. And what I've learned along that journey is how to make numbers really simple and easy and practical and how to use them to guide you in your business strategies. And ultimately, that's what I now love doing. I love teaching other business owners how to make the numbers simple and easy so they can gain real clarity about their numbers. I love showing them how to identify what numbers actually matter in your business, but more importantly, I show you how to use your numbers so that you can make better decisions, which ultimately leads to better profitability, better cash flow, and growing and scaling businesses. So let's dive into it. What I'm referring to here is when you grab a P&L, the standard P&L that comes straight out of your finance system, honestly, it's an absolute sea of numbers. And there's barely anybody that can pick that thing up and look at it and understand what's going on within it. You've got to be a pretty well-trained analyst or accountant to be able to pick up a P&L and quickly see what's going on here. And so many business owners are really hamstringing themselves before they even get started by trying to look at a standard P&L to understand what's going on within their business. A couple of the headline reasons why I hate these standard P&Ls. For one, there's just so many numbers on them. You can't see the wood for the trees to start with. So your brain's working really hard to be able to actually look at what's going on. You know, all the numbers are in like 0.5 font and you've got to zoom in because there's so many numbers on a page. Secondly, they are, when it comes to the expenses, they're listed in alphabetical order. And this is really not useful because things like advertising is right at the top while marketing is halfway down in the middle. Another example will be like contractors will be near the top, but then wages and salaries, the other part of your team, is right down near the bottom. And you're having to do this like manual math of connecting those bits and ignoring other parts to be able to add them together. Something else that really bugs me is that there's no context given for which numbers are important and which ones are not important. Oftentimes I'll look at people's P&Ls and it's just this gigantic long list when it comes to the operating expenses. It's where bookkeepers have had free reign and they love to create new accounts for every different possible type of transaction within your business, and you end up with 100 different accounts on your P&L. And this is where we end up seeing things like printing, $50, postage, $100, and you're seeing this never-ending list of meaningless kind of small numbers which really don't matter in the big picture of your business. Yet those simple lines where something where it's like $30, whatever that is there, it's having like the same amount of real estate on this report as sales at the top of the page, which is like $300,000. Yet your brain actually has to look at those numbers and differentiate between, okay, that one's $300,000, I should pay attention to that. That one's $50, I should ignore that. And it's just making it so hard for you to be able to look at these things and understand it. And finally, something else that really bothers me is generally when I look at somebody's P&L in this format, more than 50% of the page is just the overhead cost for your business, just broken up into little things. And so it's like at least half of the information on here would actually compress down to be about 10% of your business. And again, it's just noise that's getting in the way that's stopping you from being able to understand your P&L. If you're looking at a P&L that looks like the standard P&L, please stop doing that. Scrap looking at that and look at what I refer to as a simplified P&L. It's where we take all those numbers and we just summarize them down into a handful of key numbers. So the key numbers that I always summarize a P&L into, I refer to these numbers as the business drivers because when it comes to the expense side, they're just 5 different numbers which explain pretty much how any business works commercially. Once you take your P&L and group all of those expenses just into these 5 different categories of costs, first of all, your brain will thank you for it. It's so much easier to look at and understand. You're only looking at 5 numbers. But more importantly, those 5 numbers are grouped in categories that actually make sense in terms of how your profit works. And the reason it's these 5 categories, it's because each of these different categories you need to manage and use in a different way when it comes to making profit in your business. So we'll talk about this later on in my podcast in another episode about how we will use each of these different numbers. But to start with, let me tell you where these 5 categories came from. This isn't my unique idea. This goes back to when I was a CFO for a multinational marketing agency listed on the London Stock Exchange. We were in the head office over there. We had 70 plus different businesses around the world in like 60 different countries, all reporting into the head office. We needed to have a way to be able to analyze all of those businesses every week, every month, and not get lost in the sea of numbers. So of course, what we're doing is we were just simplifying all all of their P&Ls down into half a dozen numbers so that we could easily compare one business to another, see which businesses are winning and why, which ones are losing and why. So summarizing the numbers down, it's what the big guys do essentially. You can't go looking at all the P&Ls for all the different BHP companies and be able to be across it all. The people at the top need to have a way to be able to summarize it down so that they can look at those numbers quickly, easily, and understand what's going on. But the beauty of this is it's the exact same method that I use in my small businesses and what I train other small business owners to do. So having said that, when I was working for the listed agency, it was 6. I've got it down to 5 categories. And these are the 5 categories which I always summarize all of the expenses into. So the first category is the cost of goods sold. This is basically any costs of the products you're buying to on-sell, the direct costs. So if you're a retail business, this is the things you're selling, buying the sunglasses or the shirts or the bottles or whatever it is that you're selling in your retail business. If you're a hospitality business, it's the food and drink that you're buying to on-sell. If you're in some sort of construction type business or a tradie, it's the parts that you're buying, the wood, the pipes, the whatever, the bits that you're buying to be able to on-sell. Those are the cost of sales. We want to group all of those into one. The beauty of that category, straight away, you can see what your gross profit is. The sale price minus the direct cost of the things you're making enables you to see the gross profit that you're making on the things you're selling. Second category is team costs. Our team costs for me is anything related to the people who are working on your business. So I'm talking wages, salaries, contractors, their superannuation, the insurance related to the people, any kind of costs that are specifically related to the team. We want that grouped into team. I'll point it out right now. There's often a gray area. Should my team be in cost of sales? Should they be in team? At the end of the day, it doesn't really matter. Pick one that works for you. Put them wherever. I'm looking more so for what are the insights that are going on within your business and how do we use these numbers high level rather than getting bogged down in this kind of detail. It doesn't really matter if they're in one or the other. Generally, I only ever like to put team into cost of sales if they are absolutely directly related to the income. You just buy that service as you're doing stuff, or they're like a subcontract that you've brought in to help service it. Otherwise, I like to put all the people costs into one category. The reason for this is the way we manage people is very different from the way that we manage the widgets that we're buying to sell. People is all about, do I have a high performing team? How well are they motivated? Are we coaching them? What's their capacity and utilization? Whereas cost of sales are things that we're buying to sell. And therefore it's all about wastage and what's my recipes and how well am I buying stuff. And so they're very different ways of looking at them. If you're a business owner who is struggling to see results or you're overwhelmed by the numbers side of your business, we can help. Book in a call with one of my team members using the link in the description and let's get your business thriving without the overwhelm. Bucket number 1, cost of sales. Bucket number 2 is team costs. Bucket number 3 is the marketing and growth costs. Love to pull this out and have it in its own right. A little bucket which talks about what is the money we're reinvesting to drive this business, to grow this business. So definitely it's things like marketing and advertising. It's things like sales training, coaching, anything that you're investing to grow the business. Really important that we highlight this in its own category so that we can see how much of the income are we reinvesting to grow and scale this business, to accelerate it. Category number 4 is property costs. So this is essentially rent and anything else directly related to the property. The reason we want to show this, really important for like bricks and mortar type businesses to understand, yes, you might not be able to do much about the rent, but we need to know how busy can we fill this site up before we're going to need another location. And that's really important because you're able to see what your different profit opportunities are as you're growing or scaling your business, because rent will typically just remain at a fixed cost. It won't change. And therefore you're making much higher margins when you're fully utilizing your site. So really important to know what your opportunities are there. And then the final category, bucket number 5, this is the overheads is what I call this. And this to me, what goes into that is if something doesn't fit into the 4 cost categories above it, put it into the overheads. This is where you realize when you're looking at the old P&L, more than 50% of your P&L probably compresses down to be only about 10% of your business. Looking at your business just in these 5 categories, like I said, it's so much simpler and easier. You've only got 5 numbers to look at. They all make sense. It's the things we're buying to sell. It's how much I'm spending on the team. It's what I'm reinvesting in the business. It's what my rent is, and it's what just the general overheads of the business are. It enables me to look across multiple businesses across many different industries and always see exactly what are the bigger costs, which ones matter, how are the costs performing over time. It's just so much easier to analyze and understand a business when you're only looking at these 5 numbers. So that is how I do P&L simplification. To be honest, this is really only part 1 of it. Part 1 is how do we stop looking at a sea of numbers and just condense it down to just 5 simple numbers. I'll talk about part 2 in the next one. Thanks for tuning in to this episode of Profit and Cashflow Mastery. If this episode helped you gain clarity with your numbers, then please make sure you give us a 5-star review wherever you're listening to this. Don't forget to subscribe to our podcast. And if you want to stay connected, make sure you give us a follow on the socials at The Profit Analyst.